everyone, it's Sid here from Fundamental Research, and our guest today is Rick Van Nieuwenhuis, the CEO of Contango Ore and the founder of Nova Gold and Trilogy. Nova Gold has a market cap of $3 billion, Trilogy is at $300 million, and Contango Ore is at $230 million. We initiated coverage on Contango in March of this year. Shares are up 54% since we initiated coverage. So the agenda for today is I'll kick off the call with our thoughts on gold, and Rick will take over from there, talk to us about Contango Ore, his production plans, and how he attracted Kinross as a partner. For listeners, you can either wait till the end to ask questions, or if you have questions during the presentation, feel free to type them in and we'll try to respond to them. Here are some key disclaimers. Please take a moment. All right, so let's talk gold. Gold is down 5% year over year. Gold and silver have underperformed base metals as shown on the chart here. We have 4 reasons to believe that gold will perform well for the next 6 months. I'll take you through one of them, one by one. First point, interest rates are expected to stay low as the US Fed is highly unlikely to raise rates before April 2022. Especially considering that in their meeting today, the Fed stated that labor force participation has been disappointing. We know that gold's valuation or value proposition is higher when real interest rates are low. As shown here, treasury yields are at historical lows. It'll take multiple rate hikes from the Fed for yields to catch up to historical levels. My next point is high inflation. Inflation in the US spiked to 6.8% in November, the highest since 1982. We believe that inflation is unlikely to be transitory as US M2 money supply is up 35% since the beginning of the pandemic. Prior to the pandemic, M2 had increased at just 6% per annum in the last 2 decades. Note that money supply and gold prices are positively correlated. Inflation in the US is expected to be higher than historical levels and also higher than other developed economies. This means that real rates in the US will be low. It'll take multiple rate hikes from the Fed to bring this to turn real interest rates positive. Another key point to note is that rate hikes were unable to curb inflation during 2016 to 2019. Gold was up 16% during the period. The third factor for gold is rising production costs. Notice the quarter-over-quarter increase every quarter since Q4 2020. And finally, our fourth point is that historically, gold prices tend to increase when there's a correction in equity markets, especially when tech stocks fall. As equity markets are trading at record highs and well above pre-pandemic levels, we're expecting a correction in equity valuations as all of the or most of the key economic metrics are still below pre-pandemic levels. So those are my 4 points. With that, I would like to welcome Rick, the CEO of Contango Ore. Rick, you'll be able to share your screen. Please go ahead when you're ready.
Certainly, Sid. Good to see or talk to you again. Let me know that I've got my screen up, and we'll put it in presentation mode there. Just Sid, can you confirm you can see all that?
Yes, perfect.
Perfect. Well, thanks for the invitation to re-engage here. It's been an exciting year for Contango. We've got ourselves listed on the NYSE American. That was one of our objectives this year, and that happened just right before Thanksgiving. So it traded overall up about 25% once it sort of stabilized out at sort of mid $26 range. So really pleased to get that objective accomplished this year. Our projects are all in Alaska. Our flagship project is the Manh Choh project, partnered with Kinross, as you mentioned, and our Alaska Native partner is the Tetlin tribe. We also acquired the Lucky Shot project. I'll talk more about that. I won't spend a lot of time on our early stage exploration assets, but we do have a number of early stage projects, and for future exploration, we'll see what we can find on those things. One of the things that's unique about Contango is its share structure. We only have 6.7 million shares outstanding. As I said, we're traded on the New York Stock Exchange, the symbol CTGO. We have $25 million in cash, and a number of strategic investors, a couple of known gold fund investors, Gabelli Fund and Tocqueville, and then more recently the Alaska Future Fund, and that's a joint fund managed by the Barings Group, which I think manages well over $300 billion in assets, and the Alaska Permanent Fund, which is $83 billion in assets. And this is the first investment that the fund has made in a development stage mining company in Alaska. So we're pleased to have them as shareholders, and of course they have a keen interest in adding value for Alaska. So here's our Manh Choh project. It's the yellow star here. Contango found this a number of years ago. We developed a 1.3 million ounce gold deposit, measured indicated, averaging about 4 grams per ton. So quite high grade. It's at surface. It's envisioned to be an open pit. It's located right off the Alaska Highway on private land owned by the Alaska Native tribe at Tetlin. And we last year formed a business partnership with Kinross. They acquired their 70% interest for $93 million. And so they have real skin in the game. The whole reason we put the agreement together with them was to be able to truck the Manh Choh ore up the highway, up the Alaska Highway, to just out of Fairbanks, their Fort Knox operation. That's indicated by the red star. Fort Knox has an underutilized mill. It's only running at about half capacity. That does two things for us. Actually, it does a number of things for us. One, obviously lowers capital costs because we don't have to build our own mill for probably somewhere in the $400 to $500 million range. We're not building a tailings facility because the tails will go into the Fort Knox tailings facility, which has been operating for 25 years, hence a smaller environmental footprint and hence much easier to permit. And overall, because we're not constructing things, or at least not as many things, it's a much lower overall execution risk. So good reasons for forming that partnership with Kinross. Here's the terrain. It's really easy country from a mining standpoint. It's not big craggly mountains. It's just low rolling hills. This was a grassroots discovery, stream sediment and pan concentrate sampling, following up the creeks and finding the mineralized area up on the ridgeline there. This year we spent about $19 million. The joint venture spent $19 million completing studies to support the permitting effort and to complete a feasibility study middle of next year. We plan to start construction in 2022 in the summer, take advantage of the long summer days here in Alaska, finish off in 2023. Second half of 23, we expect to start ramp up and with full production in 2024. Kinross's guidance is to have this thing in production by 2024, produce on average about 220,000 ounces of gold per year. So our 30% share would be 66,000 ounces of gold. We'll be using an elevated cutoff grade, so delivering about 6 grams ore to the mill, 6 grams of gold to the mill. So again, very high grade. Capital costs, they gave a range. I'm going to assume the high end of the range. As Sid mentioned, we're certainly seeing inflation. I don't think that's a surprise to anybody. So I'm going to pick the high end of the range to plan for. So our share of 130 would be $40 million. Their guidance on costs, about $750 per ounce. So today's gold price, that leaves you a roughly $1,000 margin. Producing 66,000 ounces for our share, that would be between $60 and $70 million of free cash flow, $10 per share. So, and we're highly levered because we don't have a lot of shares outstanding, and I don't plan to issue a bunch more shares. So we'll have well under 10 million shares outstanding and generating significant cash flow. So if you see $100 increase in the gold price, that would translate to $1 per share extra cash flow. So pretty significant leverage there. We are going to talk about inflation later, but I think it's one of the things that I think we're protected at Contango is because we're not building a mill and a tailings facility. We're not spending a lot of money on things that can inflate. We can talk about that more. I think Sid's probably going to ask me a couple of questions on that because obviously in our transportation of the ore up the highway, the price of diesel will be very important. We have a lot of exploration upside here. This map area represents about 2% of the 688,000 acres land package. You can see the two black shapes there, the North Manh Choh and Main Manh Choh deposits. And there's lots and lots of geochemistry for 4 or 5 kilometers along strike that have yet to be explored. So we'll be very busy here over the next 5 to 10 years, and as well as exploring the rest of this very large land package. While Kinross is busy managing the project and as a project operator, getting this thing into production by 2024, we can turn our attention to our other earlier stage projects. I'll just point them out here. You can see the Manh Choh project there. That's in yellow, the large area. The Eagle Hona, which is continuation of the stratigraphy that we see at Manh Choh. So it's early stage. We're gathering all that early stage information and figuring out where to focus. That's 100% owned by Contango. Triple Z, we've already done that work. And we've identified a porphyry copper gold system there. We'll be drill testing that hopefully next year. We recently staked the Shamrock project in what's called the Pogo or the Good Pasture District. We're right next to the highway in a district that's produces about 120,000 ounces of alluvial gold, and we're basically looking for the source of that alluvial gold. And then lastly, but certainly not leastly, our recent acquisition at Lucky Shot, located just about an hour and a half outside of Anchorage in the Palmer-Wasilla area. Now, Lucky Shot's interesting because it's high grade. They produced about 250,000 ounces of gold, averaging 1.5 ounces per ton or 40 grams per ton. So very, very high grade gold mine. It was quartz and free gold, and all of it was recovered by just simple gravity method. So very cost effective recovery of the gold. We've staked a large land package now. All the work we'll be doing will be on the patented lands there. But we've got about 25 square miles under exploration, mostly state claims, but some other patented claims here and there as well. There were 30 operating mines in this district. So Lucky Shot was one of the larger ones, but in their day, there were over 30 mines operating here, and was all shut down in 1942 with the War Act. So there's been no serious exploration since that time. As I mentioned, 30 operating mines, all high grade, 1 to 2 ounce kind of grades. There's a lot of exploration potential for other types of deposits here, stockworks, and no exploration work, or no work at all hardly has been done in the purple rocks there, the schists, simply because at the turn of the century, when they were looking at these things, they were low grade disseminated in stockwork zones, so they weren't even really pursued at all. We're going to start with our exploration effort at Lucky Shot, where we'll take advantage of some of the existing underground infrastructure. The Ensearch tunnel, we'll refurbish that. We're in the process of doing that right now. We've got our contractor just mobilizing equipment on site as we speak. We'll get underneath into the footwall of the vein, and as shown in the cross section there, just drill the heck out of it. You can see the yellow in the top map there, the yellow spaghetti looking map there. That's a historic mining stopes for the Lucky Shot mine. That's where the 250,000 ounces of 40 grams came out of. And then the red highlighted area down dip is the area that we're going to explore with the phase 1 of the ramp shown in green there and the drill holes. And then we'll advance the ramp, the adit through the vein, bulk mine the vein, take some bulk samples of the gold, and then get in the hanging wall and drill the same thing all over again. So between the hanging wall and the footwall zones, we should outline about 500,000 ounces of resource. So That work will be underway, and we plan to start drilling in probably about July of next year, and hopefully have it wrapped up by the end of the year. So just in summary, Manh Choh represents a high quality project that for low execution risk, because we're not building a mill and a tailings facility, we're simply trucking the ore up to the Fort Knox mill. We can get this accomplished and get this project into production. And I should say Kinross is doing all the heavy lifting here. They're the majority owner and partner. While we would get 66,000 ounces of gold at roughly $1,000 margin, you can see the cash flow potential per share. And our lucky shot opportunity is still exploration. We've got a lot of work to do, but I think we have a good shot at doubling our production profile here. And again, it's high quality, and it's right next to existing infrastructure. So and of course we've got a track record of discovery in Alaska and making things happen. So I'm really pleased to be starting with this new company in what I think is a great position. So I'll turn it back over to you, Sid.
Thank you so much, Rick. We can now open the call to a Q&A. Listeners, if you have any questions, please feel free to type them in, or you can click on the raise hand option and I can unmute you. Rick, while we wait for questions, maybe we can get started with your background. So you're running NovaGold for 13 years. Then Trilogy Metals for another 7 years, and early last year, you decided to join this relatively unknown company, Contango Ore. What made you make the switch? It seems like you like building stories.
Well, I'm an exploration geologist by background, so I enjoyed doing that part of the process. I'm not a mine builder. I'm not a mine permitter. That's not what I do. My business model has been to form joint ventures with the big companies, find interesting projects, then form joint ventures with big companies that have the wherewithal and the patience, frankly, to and the capital to advance the projects through feasibility and permitting and production and operation. So we formed I think a high quality joint venture between NovaGold and Barrick, and it stood the test of time. It's not in production yet, but it's moving in that direction. These huge deposits definitely take a lot of time because they take a lot of capital, and they're big, complicated projects, things like Donlin. Similarly with Trilogy, I think I got the project to the point that I thought it was ready to hand over. We got the road permitted, the Ambler Access Road permitted, and we formed the joint venture with South32, and they put $145 million in the company. So from there, put the right people in place and let them run with it. I think the right people are in place there, and it'll run its course. Meanwhile, I knew the Contango folks and had sort of followed the story, and I thought I could help out there by getting this thing sort of off of high center. I think Contango had found a good deposit. They'd formed a joint venture with Royal Gold, who spent $40 million to earn a 40% interest, which was all great. But Royal Gold's a royalty company, not an operating company. And so if you have an operator who doesn't really want to operate, that creates a problem, and they're a minority shareholder. It's hard for them to sell a minority interest to an operator. So they kind of got themselves high-centered, and so they asked me to come in and get this thing rolling again, and saw the opportunity to work with Kinross and take advantage of their underutilized mill at Fort Knox and put the deal together that we have. So it was this was done in 2020, so the year of COVID, and it was definitely that added to the complication in terms of getting a three-way deal done. Three-ways are always complicated, but COVID didn't make it less complicated, it made it more complicated. But we did finally get it done in September, and I think it's been a great deal for Kinross. It's a great deal for the Tetlin tribe, get this thing into production fairly quickly. And I think it's a great thing for Contango shareholders, and I think our share prices reflected that.
Okay. All of your deals have been in Alaska. Now, Alaska is well known for being mineral rich. but investors have historically had concerns regarding its infrastructure. What do you see that the market is, or what is the market missing in Alaska?
I don't think the market's missing anything. As I said, we found Donlin 25 years ago and it's still not in production. I mean, that taught me an important lesson. You need infrastructure, and which is frankly why I really like the Contango story. Is we've got a high quality deposit right next to the road on private land owned by a native tribe. And as you know, I've done a lot of work in Alaska over a long period of time, and with a lot of Alaska Native entities, native corporations, tribal councils, village corporations. So, you know, I know how to do business with Alaska Native people. And so that's one big plus. We start with a great deposit with good infrastructure and on private land, and who's owned by people who want nothing more than to see this thing go into production, because they'll receive huge benefits, not only in terms of the royalty payments, but in terms of jobs and training opportunities. So you know, it's a win-win-win, if you will. But you know, taking off of that and looking at our other projects that we've put together, they're all right next to the road, and that's frankly that's going to be my mantra right now. I have no interest in going out in the middle of nowhere and finding an interesting gold deposit that will take 25 years to put into production like Donlin has. I mean, Donlin's still not in production. We found it over 25 years ago. So it's you know, for me, it's a lesson learned. I want to make a difference. I'm from Alaska. I live here in Fairbanks, and so I want to see people benefiting from mining. And so I'm going to stick closer to the road where we can. You know, it's a short amount of roads that would need to be built off of a main road, maybe 10-20 miles in to get to the project area. And obviously, we don't need to necessarily find the biggest deposit in the world if we can generate cash flow. And I think that's the other important thing, that, you know, as an exploration geologist, you sometimes get sidetracked with, you know, finding something, and you keep going back to the shareholders to more money for exploration equals more dilution. We've got a company here with Contango that only has less than 7 million shares outstanding, and we'll get this into production with less than 10 million shares outstanding for sure, and then generating, like I said, 60 to 70 million dollars of free cash flow a year. So I can see this scenario where we could be dividending a part of that cash flow back to shareholders and still spending, you know, 20-30 million dollars a year on exploration.
Got it. Exploration business, junior business, you know, there are thousands of juniors globally, but less than 5% of the companies attract juniors or majors or any financing partners. How were you able to attract Kinross to this project?
Well, it's interesting. They actually took a look at this when Royal Gold was trying to sell their 40% interest. Kinross was one of the companies that was very keen on looking at that, but they weren't interested in just owning a 40% interest. And that was, I think, 2017, 18. And then, you know, Kinross had all its troubles in Mauritania. So, you know, that discussion kind of went so far, and then it just kind of went quiet. And obviously, when I joined Contango, I you know, read up on the company and read the corporate files, and saw that Kinross had it at one time an interest. And so basically, long story short, we re-engaged as soon as I took the helm. We kind of re-engaged and got the discussion going in early 2020. And then of course, you know, COVID came along and disrupted our best of plans and timelines. But you know, as I said, in September last year, we were able to put the deal together whereby Kinross paid $93 million for 40% of Royal's interest and 30% of our interest. We kind of reorganized the joint venture so that we would have all the exploration lands 100% in Contango, and the joint venture would focus on the Tetlin lands. Okay.
You've seen quite a few M&A activities this year, most recent being Kinross's $1.8 billion acquisition of Great Bear Resource. What are the majors looking for these days? And any tips to our audience on what type of juniors they should be looking at?
Well, I mean, it's got to be a meaningful acquisition, and I think certainly there's a number of reasons. I think Great Bear represents a meaningful acquisition for Kinross. It's, size, it's a good quality deposit, and Kinross doesn't not. It's a Canadian company, but they don't have a Canadian operation. So I think that's a significant thing for Kinross to sort of step back into the motherland, if you will. I mean, their operations are have been in mostly some in the U.S., but a great mine in Russia, a couple of great mines in Russia and West Africa and Brazil. So I think seeing a corporate acquisition by a major company in Canada, I think is pretty significant as well. But they're certainly looking for for quality. I think the age of doing acquisitions to add ounces, unless those ounces are positive cash flowing ounces and truly accretive in terms of shareholder value, I think you'll see the majors being shy about doing those kind of deals. And I don't think Great Bear represents that. I think this is truly an accretive transaction and a significant one with the fact that it's in Canada.
Okay, we see majors either acquire companies outright or have JV partnerships. Which type of assets, I was thinking, which type of assets do they acquire and which they do JV partnerships? Contango, when you formed the JV with Kinross, market cap was low and then they could have easily acquired. Why did they do JV with Contango and when they go and acquire other? How do they differentiate and what is their strategy here?
Yeah, well, I mean, I don't know if it's a general statement around that. I think it's probably all sort of site specific, if you will. With us, Royal Gold was a seller. They had made their decision that they did not want to be operator, and they only owned a 40% interest, and so they were a seller. Whereas we weren't really a seller. We found this deposit. We knew it was pretty unique to have 4 grams in an open pit. In fact, now it's actually 6 grams open pit. That's what we're going to deliver to the Fort Knox mill. So that's a pretty unique asset. And bottom line is, we weren't willing to sell our 60% for the same price that Royal was willing to sell their 40%. And because of the structure of the deal, we had to agree. We didn't have to agree on their price, but if they wanted 100%, we had to agree to the price. And so that was that was the bottom line. We couldn't agree on a price for 100%, so we agreed on a price for 30%, or to give them a total of 70%. Okay. Obviously, we had a first right on the 40%. So
I have a couple of questions from our audience here. Mm-hmm. So how much capital do you need to execute the plans on these slides?
Yeah, basically $40 to $50 million of capital, and that's without looking at a debt financing structure. We're going to have a joint venture meeting here shortly, and I'm expecting our share of. I'm expecting somewhere between $40 and $50 million budget for next year, because we're starting to construct things for Manh Choh to support the Manh Choh project. So it's not exploration anymore, right? We're actually going to start building things next summer. And so that's on a 100% basis. So my share would call it 15 million. And then we're planning a $10 million program at Lucky Shot to get the underground in place and drill the high-grade Lucky Shot vein from the footwall of the underground. So so that totals 25 million. And so I think if we raise, we had 25 million in the bank. If we raise another 40 to $50 million, I think we're I think we're all the way across the finish line in terms of getting Manh Choh into production and seeing and then seeing positive cash flow out of the Manh Choh operation, so that we don't need to go back to shareholders after that point to continue to explore our properties, advance Lucky Shot. We'll be in a very strong cash flow position at that point, and we'll have less than 10 million shares outstanding.
How likely is that you'll get the remaining funds through debt, especially considering stronger gold prices, Kinross, your existing strong cash position? one would imagine that debt financing will be easier for you. Is that correct? And has debt financings in general increased due to stronger market conditions?
I don't know that I'd say they didn't increased, but certainly when you have a low execution risk project like ours, again, it's small environmental footprint. We're not building a mill and a tailings facility, so there's nothing really controversial to permit. Been operating at Fort Knox for 25 years. It's a relatively low amount of total capital, so it's relatively inflation proof because again, you're not building a lot, so there's not a lot of time and room for big amounts of inflation. If you had 20% inflation, like I've seen that some other recent projects announced updated feasibilities type studies, their capital is up 20 million or 20%. Well, 20% of a $800 million project is a lot of money. So whereas with us, 20% of our 40 million bucks is $8 million. So it's not insignificant, even if we were applied the same increase. So I think for all those reasons, debt might make sense to do, not this year, not this year coming up, 2022, but we might take a look at doing a debt facility in 2023. And if we've got better uses for our capital, essentially, and that's really the only reason why I take on debt is if I could saw the use for our capital and to make double digit or 100% gain in asset value, then I could see better using our capital for that and using the debt facility to pay off the last $20 million of contribution to get Manh Choh into production.
Makes sense. We talked about inflation earlier in this call. I also mentioned that production costs have been rising, exploration costs have been increasing. How does this impact your OPEX, CAPEX estimates, and what's your take on inflation in the sector in general?
Yeah, we're certainly seeing it, but I think most companies, Newmont had pretty clear guidance that they're seeing capital cost increases. I saw an announcement the other day by Copper Mountain on an updated feasibility study for a project they have in Australia. And their capital was, I think it was 750, and it went up to eight something. So, 20 was roughly a 20% increase in capital. So I think that's very real, and that's something investors need to sort of pay attention to. And it's not usually what happens is the gold price goes up as well. And so I think there's certainly still that expectation that gold prices might improve, although they've been certainly lackluster this year. Now, for us specifically, again, low capital overall because we're not building a lot, and there's not really a lot of time also for prices to inflate hugely. So I think we're pretty well protected on the inflation side, and plus I'm using the high end of the capital range guidance from Kinross. I'm using 130, not 105 for my planning. So our share of 40 million bucks. Now, where we are exposed, I think, and I always like to be pretty upfront about these things, is that we're transporting the ore in highway trucks from the Manh Choh site up to the Fort Knox mill. That's 250 miles. It's on a nice road. It's on the Alaska Highway, so it's all good roads in that. But it's a lot of fuel. So if we see inflation hit the fuel prices, and the fuel price doubles, where our costs are going to not quite double, but they're going to go up significantly. So that's where I see our exposure. Now, again, I think if we're seeing inflation, real inflation like fuel price inflation, then you generally also get an uptick in the gold price. And so my expectation is that that $1,000 margin is going to be pretty well protected if there are inflationary pressures, particularly on the operating side for us.
Okay, shifting gears. What do you like these days outside Contango? What do you like? Where do you invest? Do you invest outside gold? Just some guidance, some tips, anything we can take away.
Yeah, I mean, I really like the copper space. I think when people start really applying some real math and really thinking about how much metal are we really talking about when we think about executing this plan to transition the world off of carbon for both energy and transportation. It's a staggering amount of metal. I don't think any of the politicians that went to Scotland have a clue about the magnitude of what they're talking about. And copper is really at the forefront of all that. There's other metals, lithium and nickel and cobalt. All of them are important. In fact, I'd say almost all metals are important in that transition. Even platinum, the platinum group metals, because a portion of it's probably going to go hydrogen. So I think it's going to be good for all metals. I particularly like the copper space. I think copper mines take, there aren't a lot of good quality ones out there. There's a lot of 0.3% type copper projects. They'll work in some places where you don't have too much water and you don't have too many issues. But the minute you start stacking up issues and you've got such a low grade deposit, it'll become tough. So I think there's real opportunity in the copper space. That's probably my favorite space.
Okay. Obviously, there are a number of options for investors in the junior resource sector. Which sectors or sector do you advise investors to stay away from?
Oh, in terms of in general or in terms of mining?
In general, mining.
Like I don't know.
Within mining, yes.
Yeah, I know a lot of money's been made on crypto, but I have to say I don't understand it, and I can't believe the government's not going to regulate it. So it might be an interesting place to make money short term, but long term I'd be nervous about the space.
Okay, upcoming catalyst. What should investors watch out for Contango?
Yeah, we've got a lot of a lot going on. So I think take a look at our budget. And that will indicate when we announce it probably early next year, that'll indicate that we and Kinross are committed to starting construction on the Manh Choh project next year. So I think that's a significant catalyst. Look for a resource update on Manh Choh, which basically supports that we'll be delivering 6 gram material to the Fort Knox mill, not 4 grams. That's a 50% increase in grade without losing any significant ounces. We'll have exploration results to talk about. We didn't do a lot of exploration drilling at Manh Choh this year, but we did do some, and I'm expecting to get the final QA/QC results from that here shortly. So we'll certainly put those out to our investors. And then of course at Lucky Shot, we'll start mining. The contractor's on site now. They're mobilizing equipment up. We've finished the snow shed, and we'll be heading underground starting in January, and we should be in the footwall of the vein along about a 1,500-foot drift, drilling the heck out of the vein. And so we'll have lots of drill results coming in the fall time next year. And nice thing about underground is you can drill year round. So we'll have lots and lots of results. We'll advance the adits across the vein, bulk sample the vein, and of course take a look at it and really get a good engineering understanding of how to mine it. While we go into the hang wall, again, drill the vein from the hang wall side further down dip, and hopefully put together somewhere in the neighborhood of 500,000 ounces of, I'm expecting grade to be sort of in the plus or minus 20 gram range, based on those historic results, if you will. So yeah, lots of things coming up, lots of catalysts, and I think it'll be an interesting year for gold as well. This year certainly wasn't. I think as you pointed out, I think we ended the year about 5% lower than we started. So it did a whole lot of nothing this year. So I'm looking forward to a more active gold market next year.
Okay, I don't see any more questions. So thank you so much, Rick, for taking time, and everyone on the call for taking time today. A recording will be uploaded on our YouTube channel shortly. Please ensure you subscribe to our YouTube channel and also sign up to be a member of our platform, researchfrc.com. You'll get alerts when we publish new reports. And of course, you'll be able to see our list of top picks. Contango is also one of our top picks. So please make sure you sign up for our platforms. Thanks again, and wish you all the best and stay safe.
Thanks, Sid, and happy holidays, everybody.
Thank you.